Money Matters is sponsored by Strategic Wealth Designers.
Let's take a check of that stock market. Trading ended just about 20 minutes ago with all major indices ending in the green. The Dow Jones gaining over 140 points, the Nasdaq gaining over 180 points today, while the S&P 500 ended trading over 34 points in the green. Today's close follows the stock market dropping by more than 500 points on Monday and has been suffering loss after loss every week now.
That's right. We asked Mike Reeves from Strategic Wealth Designers for advice on what investors should be doing going forward.
Really what's going on here, the chickens are coming home to roost. Congress can't throw money at this forever, either can the Fed. So Congress early in the year, they threw about 2.2 trillion at it in the form of stimulus. They maybe they're doing some more stimulus, maybe not, we don't know. And then you got the Federal Reserve, they threw 3 trillion at it in the form of buying assets out there in the market, which kind of provided a backstop. There's a concern that maybe they've reached the pinnacle of that asset buying program. And if that's the case, that backstop might be coming away. Therefore, the market's adjusting to those factors.
Now, we also asked Mike about the rule of 100 and not having all of your investments exposed to the stock market. Here's what he had to say.
Well, the rule of 100, there's a transition. When you're younger, you think investing, that's just making money, and that's true. However, as you're getting older, within 10 years of retirement or you're retired, you want to not only make money, but protect money. And that's what the rule of 100 does. What happens is, give you an example, say I'm 60, I want 60% of my assets that are investments that when the market falls, they don't fall. Then I take 100 minus that 60 or 40%, that's the amount of money that I can have in the stock market. The reason that's important is it helps you with your withdrawal strategy. So if the market falls, I'm not selling investments when they're way down to try to pay the light bill, right? So I can go to that safety bucket and take money out of that to pay my bills. When the market's up, certainly I can take some profits in the market. It helps protect your assets, but it also helps protect your income in retirement.
And for more information on this topic or any other money saver topics, head on over to fox59.com and click on the Strategic Wealth tab.